Good morning. So this is a usual note like any other section. Hope you prepared. Hope you have a conceptual knowledge and coming to this MCQ practice. Directly solving 100 MCQs without a conceptual knowledge will not work. So hope you are having a knowledge about the subject, about this particular topic. Section D. Section D, the cost management, the classification of cost, methods of costing, techniques of costing, marginal costing versus absorption costing. Those knowledge hope you are having. Then coming to this particular video, because without knowledge we cannot solve certain application oriented questions, analytical questions, etc. If you have not learned, ensure that you are learning. Then coming back to this video, especially those who are accessing recorded classes. Let us begin. Go to this question. Go to this question. This is about classification of cost based on the nature. I request you to go to. The total cost of operating is 3,50,000. Total cost of operating one branch is how much? $3,50,000. Total cost of operating 10 branches for like what? 17 lakhs. For the purpose of preparing flexible budget, based on number of batches, based on number of branches warehouse operation, what is the formula that will be determined to you take what? Budgeted cost for various levels of activity. Of option A.
350 minus 200 equals 200 plus 6.
This is your fixed cost. The remaining is which one? Variable cost. So it will be y is equal to a plus bx. Y is equal to a plus bx. So 2 lakhs plus 1,50,000 into x. The company has observed the following cost of different production levels. See, whatever proportionately changes is a variable cost. So we need not even use calculators. 2,25,000 to 50,000. If you look at the output doubled, the output doubled. If the cost is doubled, that is which cost? Variable cost. The cost is not changing, that is which one? Fixed cost. We can find B is a fixed cost. A changes but not proportionately, it is semi-variable cost. C doubled. C doubled and D is a semi-variable cost, a kind of semi-variable cost. So which one is fixed cost? B. B is fixed cost. So I hope in all the options B comes. Then A is a mixed cost. Mixed cost comes in B and C option. Then this is a variable cost. This is a variable cost. I hope this is option. Clear? A is a mixed cost. B is a fixed cost. C is a variable cost. Variable cost. And of course, D is a mixed cost. Simple. Whatever proportionately changes becomes which one? Variable cost. Whatever changes but not proportionately is called as what? Mixed. It will have a variable and fixed portion. Whatever remains constant, of course, is a fixed cost. There is a 5-year contract with the shipping company to pay the amounts annually for the delivery of the goods, regardless of the amount. It's a contract to pay the following amounts. So it's more like which cost? Fixed cost. First year, whatever may be the delivery, you have to pay what? 0 delivery or 50,000 deliveries, you have to pay what? 1 lakh only. Same thing. Year wise, the cost is increasing, but not what? Output wise. So it's a fixed cost. What do you mean by imputed cost? The cost that will not have a cash outflow. The cost that will not have a cash outflow. Which is an imputed cost. Which is not an imputed cost. Exception scheme. Yes. Interest paid as an out-of-pocket cost. You pay out of your pocket. It involves which one? Cash outflow. It involves cash outflow. Read the next one. Increase salaries by 5%, keep unchanged the commission quota. They do not want to change the commission. Because of the increased demand, they are expecting the volume of sales to increase by 10%. What will happen to the total cost of sales, salaries and commission? Salary will be increasing by what? 5%. Commission will remain what? Unchanged per unit sold. The volume of sales increased by how much? 10%. They ask you to have the total cost of sales impact. So salary itself is increasing by what? 5%. But it will not increase more than what? 10%. So it will increase more than 5%, but not what? More than 10%. Prime cost includes material plus labor. We call it as which one? Prime cost. Within the relevant range, fixed cost per unit will keep changing, but when output increases, fixed cost will come down. Which one is the correct option? They ask you to work out per unit. Per unit it will decrease when activity level increases. The same fixed cost is shared by what? More number of units. So per unit it will decrease. Per unit it will decrease. Next question number 8.
Option.
Contribution margin focuses on which of the following? Sales minus variable cost, we call it as what? Contribution. That is the amount available to cover your fixed cost. That is the amount available to cover your fixed cost. They ask you to find out variable manufacturing cost is given to us. Fixed cost is given to us. They will manufacture 13,000 cases. They ask you to find out total manufacturing cost. Now add up. What is the total of fixed cost? Variable cost. Oh, manufacturing overheads budget. What will be included in manufacturing overheads? Indirect material 1.75 plus miscellaneous variable overheads 1.25. 1.75 plus 1.25 will be indirect factory wages also. So 3.5 plus 1.75 plus 1.25. What is the total? 6.5 into 13,500. 87,750 plus all your fixed overheads. Don't take advertisement. 1,79,700. Okay, so add up these fixed cost, variable cost 1.25, 1.75, 3.5 multiplied with what? 13,500. Overhead budget for the next month is 179,750. What do you mean by conversion cost? Labor plus manufacturing overheads. What is conversion cost? Labor plus overheads. Simple. When a customer is giving the material, what amount I will spend for labor plus overheads? Could be used when customer furnishes the material. to be used in a manufacturing product of a product. Cost trends, 3 different output levels are given. This is also a same question. You can see high-low method, 10,000, 15,000, whatever changes becomes variable. 15, 22, 500 rupees. Cost B, for 14,000, it is a fixed cost. For 14,000, this is a fixed cost. This is a semi-variable cost. It is not changing proportionately. It is not changing proportionately. So this is semi-variable or otherwise fixed cost. This is fixed cost. This is variable cost, which is correct. Option A. For 14,000 units specifically, they asked. Then, which one of the following refers to cost that remains same as volume activity decreases within the relevant range?
Variable cost.
Cost that remains same as the volume of activity decreases within the range. Think. Average cost will change. Total variable cost also will change. Unit fixed. Okay, this is a correct. This is a correct. Which one of the following would not be considered as manufacturing cost?
Yes.
Which will not be considered as which one? Cost கொடுத்திருக்கோம். Sales commission. Frozen dessert and ready to bake breakfast rolls. Plant property tax are part of which one? Manufacturing works. For example, you are paying tax, licensing fees, etc. of the factory building. That will be part of your manufacturing works. You are having a factory, for that you are paying certain taxes. That is part of your factory overheads. But sales commission will never be part of which one? Manufacturing works. Question number 14. At a cost of 26,000 to determine which product will be more profitable. The results of the study as follows. Let's see the question. The advertisement expenses estimated by the company for the introduction of new product is an example of which cost they ask. Plant capacity is limited, only one product can be introduced, therefore they conducted a market study. Which product is more profitable? The results of the study is as follows given. Sale of dessert, sale of rolls are given. The cost associated with two product have been estimated by கொடுத்திருக்காங்க. Ingredients per unit, direct labor per unit, variable cost, all these things cannot be avoided. All these things cannot be avoided, but what can be avoided is which one? Advertisement cost is at your discretion, not your discretion, correct, discretionary cost. 15th one. Y is equal to A plus BX. It's 4,500 hours. 5,000 hours next year. How much will be the next year? 20,000 plus 5,000 into 50. Answer is 2,70,000. 5,000 into 50, 2,50,000 plus 20,000, 2,70,000. What is an imputed cost? The costs cannot be avoided, is committed cost, yes. There is no cash outlay, dollar outlay. There is no cash outflow. That is which one? Imputed cost. But this is relevant for which one? Decision making, like opportunity cost, all those things. A company manufactures furnishes is establishing budget for coming year. All of the following items would appear in the overhead budget except freight, freight inwards. Overhead budget கேட்டிருக்கான். The question is about which one? Overhead budget. Overhead budget we will not include what? Raw material related costs. The question is specific to which one? Overheads. Selling overheads. Freight outward, selling overheads. Variable costs are all costs correct. Whenever there is a change in the utilization of capacity, what will change? Variable cost will change. Correct. Then direct material, direct labor, variable overhead, selling cost is given, fixed cost is given. In addition, the company has suffered a 27,700 unused factory fire loss during the period. What are product cost and period cost? What do you mean by product cost? What do you mean by period cost?
Get back to the product. Again,
Work out and tell me the total of this.
1,89,000.
How much?
1,89,000.
Plus this manufacturing overheads also can be included.
6,56,000.
6,56,100 directly hits this answer. The balance will be charged against revenue. Okay, it is not based on variable or fixed. It is not based on variable or fixed. They ask you what is the product cost.
Factory insurance includes.
Yes. This is uninsured loss. This cannot be taken. 108,400, 235,900, 121, and this 27,700 also will be charged in which one? P&L account. It's a loss. It's not an insurance. It's a loss. Conversion. Next, conversion costs are labor plus factory overheads. Labor plus which one? Factory overheads. In traditional manufacturing operation, direct costs would normally include raw material cost. They are using absorption costing method. Means they include both what? Fixed and variable cost. We need to work out for 12,000 units. So 32, 20, 15, 6, estimated total variable cost. Estimated total variable cost they ask for. Do they ask you production cost or total variable cost? Or total variable cost, all these things can be included. Or they ask you total variable cost. So what can be included? Direct labor, direct material can be included, then variable manufacturing overheads can be included, and variable what? Selling overheads can be included. The question is variable cost only. So 32, 15, 3. What is the total? Labor also. 70 into 12,000 or 70. Okay, per unit. 70. The question is about variable cost. Total variable cost. Full costing, same thing is given. Estimated conversion cost is given. What do you mean by conversion cost? Labor plus manufacturing overheads. How much it will be?
41.
The 20 plus 15 plus think about 6. 6. Which one should be added? 32 should not be added because the question is about conversion cost other than material. So labor and overheads. 30, 20 plus 15 plus 6. 41. Answer is C. Same question. Prime cost. What is prime cost? Direct material plus direct labor. Direct material plus direct labor. 52 than ever. Only direct material plus direct labor than include.
Oh.
Answer is 52. A company operated 10 cars in the previous year. Total cost of operating was in that 1,40,000 is fixed cost. All these remaining 6 were. This is 10 offices. Total cost. So balance will be like variable cost. 8,40,000 divided by 10 offices. What is the variable cost per unit?
Sir,
1 million minus
1
1,40,000.
million one. Option A.
So, what will be the budgeted cost if they operate 12 branches? So, it will be like 12 into 84,000 plus fixed cost 1,40,000. A plus B. Okay, this is a total cost for 10 offices. So, this total cost will include this fixed portion. Balance will be variable portion. So, per division it will be like 84,000 into 12 variable cost plus fixed cost 1 lakh. 1 million minus 1,40,000, 8 lakh 60. What is the answer? 11 lakh 72,000. Correct. Cost that can be directly traceable is called as
Option prime.
the option prime.
Because
What is the best example of variable cost?
cost of
Best example is raw material cost. Then read further. What is given?
Cost relationship.
Range of activity.
option A. Economic no.
Cost relationships. Cost relationships hold what? Constant. Variable and fixed. Within the range, it will behave like that. Cell company has discovered that cost of processing customer invoice is strictly variable within the relevant range. Which one of the following statements of cost of processing customer invoice is incorrect?
Option C is incorrect.
Which is incorrect? Variable cost per unit will remain what? Same. Variable cost per unit will remain what? Same. Here they say cost per unit will decline. Cost per unit will not decline because variable cost per unit will remain what? The same. Read the next one. Depreciation is a fixed cost. Crew salary is a fixed cost. Engine maintenance is a fixed cost. It will change according to a number of services offered. Committed cost.
Infrastructure.
It will not fluctuate.
D,
B or D.
D, no.
Attention by devoted by the specific method. No, it will not change. It will not respond. Committed costs are like, for example, I've taken insurance. Okay. Can I escape? No. You have taken insurance policy, you cannot withdraw or cancel kind of a thing. Committed costs cannot be avoided. They are more like past decisions. Question number 32. A fixed cost that would be considered as direct cost when what is a direct cost? The cost that can be traced with what? Directly with the department or product. Directly with the department or product or cost object. We call it as which cost? Direct cost. So in this, what is becoming a direct cost? What is becoming a direct cost? Simple. A. Production supervisor salary when cost object is which one? Production department. And production department is the cost object. When you are measuring the cost of production department, when you are measuring the cost of production department, production manager salary will become direct cost to the production department. Otherwise, production manager salary is a direct cost to the production department, but indirect cost to the product. Fixed A variable, B semi-variable, 1000, 3630, 3000. This is variable. So A and D are variable. B
Option.
mixed. Answer is D. Read the question. $13.5 is a carrying cost, sunk cost, committed cost, mixed cost. Total overheads of 13.5 கொடுத்திருக்கேன். What comes to 13.5?
9 plus 0.5. Variable 9.
Oh,
9 plus 4.5. How much it gives? 13.5. 13.5 is it's a mixed cost. How? In the 13.5, a component is fixed and a component is what? Variable. So when you express 13.5, that is becoming which one? Semi variable cost. You can call it as mixed cost. I'm going to check the answer.
option.
Variable overheads per hour 9 and fixed overheads 4.5. Total overheads are like what? 13.5. This includes both fixed and variable portion. The same question is given. R&D cost of the two new products are like which cost? Sunk cost. It cannot be recovered. Same question. Advertisement and promotion cost of the things, discretionary cost. Discretionary cost. Same question. The cost included in fixed overheads are fixed factory overheads, Is it prime cost? No. Is it discretionary cost? No. Is it sunk cost? No. This is which one? Committed cost. Otherwise, fixed costs are already committed, like rental charges, all those things, depreciation, etc., are like covered, more like a committed cost. What is the question? 60% of direct labor cost. They ask you to find out prime cost. They ask you to find out which one? Prime cost. What should be included in prime cost? Include transportation in also. Minus this. This direct labor eliminate. How much you get?
1,20,000.
1 lakh? 1,89,000 purchased. Oh, there is a raw material stock is there. So opening stock plus purchases minus closing stock.
1,10,000.
Opening stock plus purchases minus closing stock minus returns plus transportation plus direct labor.
Materials 2,01,000.
Materials opening stock, do this. 1,34,000 plus 1,89,000 minus 1,24,000 minus returns 1,000 plus 3,000
Minus 1.
plus 3 lakhs.
Plus 60% of it.
No. They ask you only. They ask you to only work out which one? Prime cost. Only this much. How much?
1,10,000.
5 lakh?
1,000.
The question is only prime cost. Opening stock plus purchases minus closing stock minus returns plus transportation plus direct labor. Read the next question. Sales commission expense will be 8%. Incentive will be like half percentage, additional half percentage.
8,000.
So, think. They ask you marketing cost of the new product category.
Variable marketing மட்டும்
Do they ask you total or variable? Only variable cost, no, correct. 8.5% of sales. Others are like fixed cost. Others are like which one? Brochure preparation. Irrespective of sales, it is going to be what? Same. So 1 lakh into 8.5%, how much? 8,005. Because the question is about variable marketing cost.
Total cost are different.
Total cost, we will include 20 into 100, 10 into 150 also. 3,500 also will include.
அது அப்படியே add பண்ணிக்கலாம்.
This is the cost. Discretionary costs are
See,
at your discretion. Next. Law company has found the total electricity cost as both fixed and variable cost component. What is given next? Read through.
variable
Seems to vary with number of units produced. Which of the following is incorrect? Total electricity cost will increase. Okay, correct. Variable electricity cost per unit will remain the same, correct. Fixed cost per unit will decline as the production volume increases, that is also correct. Total electricity cost per unit will increase, no, it will decrease. Why? Because of the fixed cost component. Variable cost component will remain what? Same. Fixed cost, when you produce more units, it will come down. So overall total cost will come down when the production increases. That is incorrect. But இதுதான் பார்க்கணும். There is a fixed cost and there is a variable cost within the relevant range. Total electricity cost per unit of production will what? Decrease. So this is incorrect. Material, labor, variable, fixed manufacturing overheads. Fixed manufacturing overheads is for an average level of 8,000 units. Based on this data, total manufacturing cost for 9,000 units. See, variable cost. What is a variable cost? No, they ask you to find out total manufacturing cost, not overheads. So 20 plus 25 plus 10. What is the variable cost? 45 or 55. 55 into 9,000, that is variable. Fixed will remain the same, 15 into 8,000. Fixed cost will not change. Right? So 15 into 8,000 plus 55 into 9,000. Is the answer?
Variable flow at 95,000.
Plus fixed total at 20.
Plus
Plus 15,000.
What is the answer?
15.
6 lakhs 15,000. Then read further. Water will change. It should be both direct as well as what? Fixed cost. Salary is a direct cost for the store, and of course it is fixed also. Water is variable, toilet tissue is variable, advertisement is what? Maybe variable or fixed. What is semi-variable? Electricity. It's a fixed cost. Postage, reservation, confirmation variable. Okay, local. Read this. What will be the total selling and administrative expense budget? Total selling and administrative expenses budget. Really? What and all will come in fixed overheads? Factory should not be taken. They ask you to find out only selling and administrative. So we should not consider this. 40,000, 22,000, 15,000, office rent 10,000, office equipment 8,000, 3,000 other administrative expenses. Add up all the red lines and depreciation is also part of which one? Fixed expenses. What is the total of all these things? 40,000 plus 15,000 plus 10,000, 22,000, 8,000, 3,000. What is the total?
Into 5.
This is a fixed cost. Very fixed cost will remain the same. Tell me the fixed cost first. 40 plus 22 plus 15 plus 10 plus 8 plus 3.
8.
What is the variable expense in this cost? What is variable cost? this 15 இருக்கு, அப்புறம் promotional expenses 5 இருக்கு. Cost of goods sold doesn't matter. This 20 also should be taken. So what is the variable cost? 20 plus 20 plus okay 40. 20 plus 15 in plus 5, 40 into how many units? 5,000 units. So what is variable? 40 into 5,000, 2 lakhs plus 98,000. What is that? 2 lakh 98. They ask you total selling and what? Administrative expenses. They cover both fixed as well as what? Variable, both administration as well as what? Selling expenses. Many companies recognize three major categories of costs: direct material, direct labor, and overheads. Which of the following overhead costs is a production of an automobile? Overhead cost of production. That is part of your factory overheads. This is direct labor. Delivery cost is delivery of freight inwards. Cost of tires is a direct material. So overheads are small tools, correct? They ask you to find the total cost to produce and sell. To produce as well as what? Sell. Be careful. All costs are variable except 1 lakh for manufacturing overheads and 1 lakh for what? Selling and administration overheads. So from the manufacturing overheads, you have to eliminate what? 1 lakh. So balance will be variable. Balance will be variable. 1 lakh the variable. Administration overheads, how much you have to eliminate? That is also minus 1 lakh. So balance will be variable. So tell me, what is the variable overheads? 2 lakh plus 1 lakh plus 1 lakh plus 15,000. What is the total? 6 lakhs 95,000 is for 1 lakh.
No, sir. Finance.
Okay. So now let me work out. So 2, 3 lakh, 4 lakh, 4 lakh 50. Yeah. 4 lakh 50 is for 1 lakh. What is for 1 lakh 10,000? 4 lakh 95,000 more. Plus fixed costs. Plus fixed cost goes 2 lakh. 1 lakh plus 1 lakh 2 lakh. This is your variable cost. Then fixed cost is that 1 lakh plus 1 lakh. Answer is how much? 6 lakhs 95,000. The question is total cost to produce and what? Sell. 48. While identifying fixed cost and variable cost, there is no such assumptions like 5 years. Total costs are assumed to be linear when plotted in a graph. Simple. Linear means that something grows along with something. Okay, so that is what. Which of the following is correct with respect to relevant range? The question is about relevant range. Fixed cost will not change within the relevant range. Okay, estimating fixed cost and variable cost allocation. Look at this. 0.947. Variation is how much? 94.7%. Normally, it should be a positive term. It is a negative term. What is the meaning? That is not the thing. Negative term in this equation could be that normally it should be fixed cost. Fixed cost should be positive. It is given negative. So that is not within the relevant range. Zero output is within not, which is not within what? Relevant range. Only within the relevant range, fixed cost and variable cost will behave accordingly. Okay. Flexible budget for next month. The company estimates cost within the relevant range. 10,000 to 30,000 units. 10,000 to 30,000 units. Electric cost was 39,600 for 18,000, 42,000 for 20,000. How much is the electricity cost for 24,000? So we can work out variable portion, change in the cost by change in the output. Variable portion, change in the cost by change in the output. 39,600, 42,000. What is change in the cost? 2,400 divided by 2,400 divided by 2,000. What is it? 1.2. Okay. From how to find out fixed cost? From 39,600, eliminate variable portion. 18,000 into 1.2 will give us fixed cost.
21,600.
So they asked you to find out total cost. Yeah, total cost will be for 24,000 units. For 24,000 units, 21,600 plus 24,000 into 1.2. What is the answer? Correct. 50,400.
1.14.
What is variable? Whatever changes with output. So 39,600 to 42,000. If you look at the change is 2,400. For a change in output of 2,000 means whatever changes becomes which post? Variable cost. From the total, eliminate variable portion, you get which portion? Fixed portion. So y is equal to a plus bx. Fixed cost is 21,600. See, 39,600 includes this variable cost element. So balance is fixed cost. So 21,600 plus 24,000 into 1 point. You get 50,400. They ask you to use high-low method. High-low method is nothing but change in cost divided by change in output. Change in cost divided by change in output.
8,000 rupees.
அப்படி எடுத்துக்கலாம். What is the change in the cost by change in the output? Variable cost. 600 divided by
3,000.
3,500. What is the change?
0.17.
0.17. 0.17 இங்க வருது. குறுக்கு இருக்கு. Suppose if this question is given, 0.17 is not coming in any other option. If it is comparing 9,000 and 11,500, 300 divided by 2,500. What is the answer here? 0.12. 0.12. Probably this could be the answer. But that is not logical. But given the situation, this option we can take. We can check fixed cost also. If 0.12 is fixed, do it 9,000 into 0.12. 9,000 into 0.12. How much you get? 1,080. 2,800 minus 1,080. 2,800 is the total cost. Minus 1,080.
170.
That's what they've taken.
Increase of amount created.
They increase the production by 20%. They increase the production by 20%. Let us work out the cost and see. For 2 lakh units, what will be the cost? For 2 lakh units, 66,067.18 plus 2 lakhs into 2 lakhs into 2 lakhs into what? 0.4. 80,000 plus this.
20,000.
Plus 66,067. 146,067. For the other one, 66,067 plus 2.4 lakhs into 0.4. 2.4 lakhs into 0.4 plus 66,067.18. Add plus 66,067.18.
0.67.
Compare what is the increase? Difference 162,067 minus 146,067.
$2,000.
16,000 divided by 146,067 into 100 will give us percentage of increase. This will give us percentage of increase. No. We want per unit cost. Analysis is not total cost. Analysis is which one? Per unit cost. So, okay, work out per unit cost. divided by number of units போட்டு you see the change.
But இப்படிதான் work out பண்ணணும் எனக்கு.
It will decrease, total cost will decrease. When the output increases, per unit cost will decrease. Per unit cost will decrease. Decrease, எவ்வளவு சொல்
Yeah.
work out per unit cost, work out per unit cost, then see the change, then see the 14606 divided by 200,000. This divided by 200,000 per unit cost work out பண்ணு. Let us work out that also, no issues. Per unit cost.
0.675279
Point
6752.
76. What is the decrease? From 0.730 to 0.676. What is the decrease? 0.5. Okay. So if you look at percentage of decrease, 0.055 divided by 0.73 into 100. What is the decrease? See, it has decreased by 0.055 greater than 7. Okay. So decrease greater than by 20% chance. So based on the change in cost by change in output will give us variable portion. Calculator, let us do 2 lakh minus 80,000, 1 lakh 20,000 divided by 4,000. 2 lakh minus 80, 1 lakh 20,000 divided by change in output 4,000. Per unit 30. So 5,000 into 30 will give us variable portion. 5,000 into 30 will give us variable portion. What is variable portion? 1,50,000 is a variable portion. So, but cost is given as 2 lakhs. Now, difference is what? Fixed cost. $3,000 to 35,000 units given. Cost driver is given. What is the average cost per unit for a level of 8,000 units of cost X? So, here also 3,000 to 35,000. You have to find out which one. Same method. Change in the cost by change in output for it. Then work out what? Average cost per unit. Work out the cost for 8,000. Then what? See, what is the change in the cost? The relevant range. What is the change in the cost? $52,680.
28,980.
Divided by 9,000. This will give us variable cost. How much variable cost per unit? Divided by 6,000. Divided by 6,000. Sorry, change it. 28,980 divided by 6,000. This will give us variable cost per unit. 4.83 per unit. So from the total 52,680 minus 4.83 into 9,000. Minus panadana, you get fixed cost. This will give us fixed cost. Total cost. Total cost for 8,000. Let us do it. Tell me the amounts.
23
And adjust this 52,680. 92. So total cost will be 9210 plus 8,000 into 8,000 8,000 into 4.83. 4.83 into 8,000 plus 9,210 will give us total cost. What is the total cost?
Any increase in
Average cost they ask for divided by 8,000. What you get?
5.99.
Any doubt in it? We worked out variable cost, we worked out fixed cost. So total cost for 8,000 divided by 8,000 units will give us average cost. Answer is what? 5.9. 5.98. For 20 maintenance hours, what will be the maintenance cost in K2? Go through the handout and try. For 20 maintenance hours. Try பண்ணு. So y is equal to a plus bx. What is y? What is a? What is a?
இந்த 570.
A வந்து 684.65 தான் a plus bx. What is bx? 7.2884 into how many units?
420.
420. So what is the answer?
That's option D, sir.
Option
D,
D.
D746.
Simple, that's all. The relevant data is only what? Y is equal to a plus bx. So we are given the value of a and we are given the value of b. X refers to number of units. What is linear equation? Based on the linear analysis, not based on ILO method, etc. For 420 hours, how much it will be? Next part. $25x கொடுத்திருக்காங்க plus 75 கொடுத்திருக்காங்க 25x கொடுத்திருக்காங்க plus 75 கொடுத்திருக்காங்க. So what is the fixed cost? What is the variable cost? 75 is fixed cost and 25 is which one? Variable cost. What is the correct answer? A. மாத்தி கொடுத்திருக்க அவ்வளவுதான். A plus bx, it's given in the other way. While gathering information about usage of annual budget, preparing annual budget, a company identifies cost drivers associated with the manufacturing cost. Which one is a quantitative analysis? Quantitative analysis method, company can use measure average change in the manufacturing cost. Quantitative analysis. See, exponential smoothing is not a quantitative analysis. Time series analysis also not the thing. Okay. For estimating the manufacturing cost associated with a change in cost driver, associated with which one? Change in cost driver. Now, always which one? Regression analysis. Okay. Next. A manufacturing company estimates semi-variable cost using high-low method. Using high-low method. Recent data is given to you. 29,000 machine hours are budgeted. Estimated semi-variable cost would be ketricon. They ask you only which one? Semi-variable cost. Work out change in cost by change in output. 1 lakh minus 96, 4,000, 22 and Work out the variable cost component. Okay, high-low method. 120 and 96.
3.7.
30,000, 23,600. What is the change in cost by change in output? 24,000 divided by 24,000 divided by
24,000.
1,20,96. 24,000 divided by difference 6,400. What is the variable cost per unit you are getting? Clear.
Or
24,000 divided by 6,400.
seven.
3 point. Okay. Then from total eliminate variable cost. From 1,20,000 eliminate 3.75 into 30,000. You will get fixed cost portion. What is the fixed cost portion?
10,500.
So 7,500 is fixed cost plus 29,000 into 29,000 into 3.75.
Into 1,16,000.
But what we have done is correct. No. We have to use which method? High-low method. High-low method. Now what is high in this?
1,20,000.
Mission hours. We should have compared this and taken. Highest and lowest points we should have compared and taken. Hours. So difference will be 20,000 divided by 6,000. 20,000 is a change in cost divided by 6,000. How much you get? 8,000. 8,000. 20,000 divided by 8,000. How much you get? 2.5. So 1,20,000 minus 2.5. 2.5 into 30,000. Fixed cost you will get. It is 45,000. So the answer will be 45,000 plus 29,000 into 2.5. This is the correct answer. Should be the correct answer. High-low method. How much?
1,7,500.
1,17,500. Done. 61. Value of work in progress inventory category. Okay. Material plus labor, raw material used in production, okay, cost of goods manufactured. Let us work out. What is material? Manufacturing labor 2,80,000 plus 3,75,000 plus 4,50,000 plus 4,50,000 minus ending WIP will reduce. This will be the thing, but the total cost of goods manufactured is given. What is the answer you get up to this? 2,80,000 plus 3,75,000. Ending inventory will reduce. Raw material used in production we will add. Up to this, what is the answer you are getting? 8,75,000 is the thing. So, what cost of goods manufactured is how much? 11,25,000. The difference would have been opening WIP. Because we add opening WIP. How much we need to add to get this 2,50,000? Any doubt in it? Next. Details of budgeted cost of goods manufactured is given to us. Read further. Details of its budgeted cost of goods manufactured schedule should come from which of the following?
Working. Yeah.
Details of its budgeted goods manufactured schedule.
Cost of goods is
Direct material plus direct labor plus manufacturing overheads. Add opening WIP minus closing WIP we do. That is answer 62. They ask you to find out cost of goods transferred to finished goods inventory. Work out. Raw material consumed, let us work out. Opening stock plus purchases minus closing stock will give us raw material consumed. Opening stock plus purchases minus closing stock will give us raw material consumed. What is the raw material consumed? 67 plus 163 minus 62. What is raw material consumed? 1,68,000. Then add direct labor 2 lakhs. Add factory overheads. Add factory overheads 1,32,000. Add transportation cost in, that is also part of prime cost. Transportation in 4,000 minus purchase returns. Minus purchase returns 2,000. With this, add opening WIP. Add what is opening WIP? 1,45,000. Less closing WIP. What is closing WIP? 1,71,000. This will give us cost of goods manufactured. Raw material cost consumed, direct labor, factory overheads, transportation in part of raw material cost only. These two are part of which one? Raw material cost. Then add opening WIP minus closing WIP will give us cost of goods manufactured. How much? Wait. Look at this. Does it change? Factory overheads are charged to production at what? 70% of labor cost. So here this will not be 1,32,000. 70% of labor cost. This is 70% of labor cost. 70% of 2 lakhs. 70% of 2 lakhs will be 1,40,000. Overheads are applied to the production at 70% of labor cost. No work. How much you get? 4,84,000. Option is D. I have not read this properly. This is actual factory overheads. We are not bothered about actual factory overheads. How much is applied? Same data. They ask you to work out only prime cost. So same information let us take. Only up to this. Raw material cost. Opening stock plus purchases minus closing stock raw material cost, and the carriage inwards minus returns plus labor cost, material and labor only. 3,70,000. Then beginning balance was 27,500, ending balance is 28,500. 128,900 is used. How much is purchase they ask for? So used is nothing but 128,900 is nothing but 128,900 is nothing but opening stock plus purchases minus closing stock 27,500 plus purchases we do not know. What is the closing stock given? 28,750. Solve this, you will get purchases. Or indirectly, if you want to put how much is used, that's a shortcut method. How much is used? 128,900. What is the increase in inventory? 27,500 to 28,750. 1,250 increased. Directly, you can do that by that method also. How much is consumed? 128,900 plus how much inventory increased? 1,250. This will also give you the answer. What is the answer?
1309.
Consumed plus increase in inventory. Consumed, the increase of inventory level, both are purchased. Both are.
Sorry, the EU was
Also,
This is not covered in your syllabus. This is removed. Equivalent production is removed. Equivalent production is removed.
supposed to be one of the
That is removed actually. Beginning finished goods 1 lakh irukku. Cost of goods manufactured is given. Ending inventory is given. They asked you to find out what? What is the cost of goods sold? Simple. Opening stock plus goods manufactured minus ending inventory will give us cost of goods sold. Opening stock plus manufactured minus ending inventory will give us what? Cost of goods sold. Ending inventory of finished goods is given. Beginning inventory of finished goods is given. Cost of goods sold is given. From this, find out cost of goods manufactured. Normally, what will you do? Cost of goods manufactured, add opening finished goods. We'll go like 1 lakh. Less closing finished goods, 25,000. This will give us cost of goods sold.
315. Oh, sorry, 315.
Cost of goods sold is 4 lakhs. So what is cost of goods manufactured? Go reverse and find out. 4 lakh plus 25 minus 10. 4 lakh plus 25 minus 10 will be cost of goods manufactured. What is cost of goods manufactured?
415.
4 lakh 15,000 is given. Overheads are estimated to be 2 times of which one? Direct labor. Overheads are estimated to be 2 times of which one? Direct labor is given to us.
Yeah,
Material used we can reduce. Material how much is used?
315 equal to
1 lakh. Okay. So this is labor plus overheads. Labor plus overheads 3,15,000. It's given. Overheads are 2 times of direct labor, which means if labor is 1, overhead will be 2. Total is equal to 3.
315 by 3 is 1.
So if 3 is 315, what is 1? Labor dana ketirukkom.
Yes, sir.
315. If it is 3, what is 1? What is 1?
Not 5.
1 lakh 5,000. 1 lakh 5,000. Sales minus gross profit will give us what? Cost of goods sold. What is cost of goods sold? What is cost of goods sold? 1,12,000 euro. Closing finished goods 58,300 given. Opening finished goods 60,190 given. Go reverse, do reverse and find out. 1,12,000 plus 58,300 minus 60,190 will give us cost of goods manufactured.
110.
110. 1,12,000 plus 58,300 minus 60,190 will give us what? Cost of goods manufactured. They ask you to find out cost of goods sold. Cost of goods manufactured is given to us. What is cost of goods manufactured? 2 lakhs. Add opening finished goods 20,000. Add ending inventory 15,000. Minus 15 ending inventory 15,000. What is the cost of goods sold? 2,05,000. Then they ask you to find out cost of goods sold per unit. Direct material, direct labor can be added. Administrative and selling expenses can be added. Factory overheads supplied 25 into 800. 25 into 800. So work out.
$45,500.
This plus 800 into 25. What is the total cost you are getting? 45,500 divided by what? 7,000. 45,500 divided by 7,000. How much you are getting? Cost of goods sold per unit they asked. 6.5. 6.5. Next. Equivalent units are not covered, eliminated. Equivalent units are not covered, eliminated. Information contained in cost of goods manufactured budget most directly related to which one? A. Okay. So we'll continue with which one? Joint products after the break.